Sir, while you've explained the portfolio construction process, when a new client enters and at inception how the funds are deployed, if we can go just one step deeper into when you identify a stock that needs to become a portfolio company, how do you build the weight in that stock? If it's available at desired valuation, do you go at it at a single go, or do you still follow time diversification?
Generally, we would try to build the position gradually, unless we believe that the market is extremely oversold. When we run some, we have our own market monitor. We run various formula to see how the market as a whole looks to us in terms of valuation. We have something called Sameeksha ratio, which is basically taking into account the price to book for the companies and or the index as a whole, and versus their return on equity and so on. So it gives us a fair idea of where we are in terms of the overall valuation of the market. If market looks super attractive overall to us, or maybe the pessimism is really high and we are actually more convinced about the long-term outlook, we may build positions very aggressively and very quickly. However, if we are in sort of a relatively frothy environment of a market, we would try to do a little bit of time diversification in terms of building a position. So it depends on how we feel about the overall market, and also overall about the particular opportunity as well. If the conviction is super high, we might be far more aggressive.
Okay, so in some sense, Sameeksha Capital does make a sincere attempt to time the market using various ratios and quant parameters that you track on the broader market as a whole.
Correct.